Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing. My guest today is Niyi Adewole. We're going to talk all about going from investor to investor-friendly agent and all the steps in between that worked for Niyi. This is a great show. Can't wait for you to hear it right now. This is episode 247 of Zen and the Art of Real Estate Investing with my guest, Niyi Adewole. Niyi, like me, I think we're swapping bios, is an investor-friendly realtor, real estate investor, and a podcast host. Niyi, welcome to the show.
Jonathan, thank you for having me. I'm excited to meet and connect with you. And yeah, you're right. We basically have the same bio. We just live in two different parts of the country.
Yeah, I mean, well, we're swapping areas, but yeah, it was interesting. We kind of had to shut down our pre-call because we were getting too good already and we needed to get this thing recorded. So tell me how you first got interested in real estate. Was it agent first or investor first?
Definitely investor first. And it came through Bigger Pockets, odd enough, right?
Yeah,
so
awesome.
I think everybody or a lot of people get into or learn about real estate by reading Rich Dad, Poor Dad. I am not different. I read that book and I'm like, man, this is amazing. I want to go out there and do it. And then I reread the book and I'm like, there's not an actual manual of how to get out there and do this. And so through doing
it's the light bulb, but you're right. There's not wait, what's the next steps? It's usually oh, should we play cash flow quadrant or cash flow or something? But there's no course for it really.
Exactly. And so I was blessed to find and see that Bigger Pockets had just released a podcast. This is back in 2015. So it was early on days, and started listening to that. And that's what really got me the step-by-step approach of how to get in. And so that was about a decade ago. And I started on the investment side by buying a house hack.
Yeah. So, I mean, what interested you about real estate? Was it the opportunity to make secondary income, or did you think even right then, wait, this is going to be my full path. Eventually, I want to be in this full time?
Definitely did not think it was going to be my full-time thing. It started off as just a side hustle. What I wanted to do is I was able to get into a nice corporate job. I was in medical device sales, and it's very hard to get into medical device sales. It's like the epitome of sales, either that or tech sales. And so I was making income, and I, full transparency, did not at the time know how to invest it. I actually sat down with a lot of my finance guys that were just around the office to ask them hey, what is a 401k and how do I work this thing? Where should we put money over there? So that was one piece. And then the Bigger Pockets piece showed me that, hey, you can eliminate one of your biggest expenses and start building something up on the side so that you have your money working for you, even more so than, say, the stock market.
Yeah, and it's interesting because podcasts weren't as popular then. There wasn't 8 million podcasts. So it was when I listened to Bigger Pockets, for me, I had been in the game for so long, I just didn't realize other people were in the game. I was like, is this really there's all these people and then I can try to contact them afterwards? Is that did you have a big aha for real estate as opposed to other forms of investing that a lot of financial analysts recommend?
Yeah, it just made more sense to me. Stock still was a very foreign thing, right? Now I kind of understand the ETF game and just dollar cost average over a long time. When I was looking at it back then, I'm like, dude, I don't know how to choose these companies. The CEOs of these companies barely know where they're going. How am I going to figure it out, right? And so from a real estate standpoint, when I started listening to that and reading more books on this and started actually running the numbers and researching, I was like, all right, I can definitely get a tenant into a property and I can definitely run the numbers on it ahead of time to make sure it makes sense. And so real estate was that linchpin and what I felt the most comfortable investing in.
Yeah, awesome. So how did you get started? I mean, what led you to finally take action to put some money into the game?
Yeah, so I got promoted at work and I was in a development program in Chicago for about a year and a half. They promoted me to a portfolio rep out in the field in Louisville, Kentucky. Now, at the time, I couldn't pick Louisville out on the map, right? I literally was like, where the heck is that?
Yeah. Somewhere in the middle.
Somewhere in the middle. And when I saw where I was going, I was actually a bit disappointed. I wanted to go to a bigger city. I'm like, listen, man, I got some of the other people that were in the program are going to LA and Texas. I'm like, I'm going to Kentucky.
Yeah.
But it turned out to be a blessing in disguise because, one, the cost of living is a lot cheaper down there. And two, there's less to do, at least back then. And so I just saved money. And so I was able to save up a down payment, and I went and bought a triplex. I lived in one unit, rented the other two out. And at the time, I was able to live for free. So I went from paying $1,100 a month to live in a 2-bedroom apartment to now living for free. And that's what really lit that fire under me. And I just kept investing actually on that same street for many, many years to come.
Did you know you were house hacking at the time, or was the term not even out yet? Because I've talked to so many investors who are like, I just bought something with multiple units and rented them because it's just smart money.
Yeah. So the term, I think he had just coined it. Brandon Turner had just coined it. I listened to one particular episode. I'll never forget it. It was episode 64. It was with this guy, Serge Shukrat. Does that name ring a bell?
64. So they're like well over, the last time I was on, it was in the thousands. So it's like,
this was literally a decade ago, but I listened to that episode, and that guy was talking about it. He said, I was buying small multifamilies, living in one. And so like, it just really lit that in me. I was like, you know what? I can go buy a house for 3.5% down and lower my cost of living. Let's go do that. And so I did it.
Yeah, and certainly doing it at 3.5% down at that time, there wasn't the competition and low inventory like there is now. So you can easily score with a 3.5% loan on multifamilies. That's why it was, house hacking became so popular, but it's just harder now without the inventory, of course, on the investor side. But we're in different markets. You have more inventory where you are in the South in Georgia than I have in New Jersey. How long were you investing until you decided to get your license, and why?
So a little over 6 years. Like, I loved what I was doing from a medical device standpoint, and I was getting promoted. So I got promoted within 15 months when I was in Louisville, moved up to Boston, and I was there for 3 years selling the actual medical devices to the hospitals. And we were closing deal after deal. It was amazing. And so I was able to funnel that money into building up more investments, and eventually built up to 30 units in Louisville while I was in Boston from just the deals that we were closing. Now, the piece that changed for me is I wanted to get back closer to family, and most of my family's in the Southeast. And so I've been on the road. I've done the Chicago. I've done the Kentucky. I've done the Bostons of the world. And for the next role, I wanted to come back to the South. And so I took a director role, which is a step up, but it was completely different, right? In a director role, you're no longer getting the thrill of chasing down a deal and celebrating with everybody. You are getting all the bullets, right? So you're getting the CFO or the CEO calling you in the middle of the night on a Saturday, like, hey, where are our fluids? We need this, like that type of deal. And it's really an unsung hero role. And so it was in 2021, after I moved to Atlanta, Georgia, and moved into that director role, that I started to map out a game plan of, hey, what would it look like if I did move into full-time real estate, and how could I make that happen?
Yeah. Did the pandemic play a role in that too? Because the timing seemed to coincide. Like, well, you were past 2020, but here we go, 2021. It's still kind of lingering, or at least the idea of how everyone was going to work.
Absolutely. Plus, everybody knows, and at least this audience will know, that the real estate market just exploded from 2020, 2021, and the beginning half of 2022. And so that helped when you start seeing like your net worth increasing rapidly, and seeing like, hey, all these deals I bought are just working, like the short-term rentals, the long-term rentals, everything's going well. And so that definitely encouraged moving into full-time entrepreneurship. I would say yes. And then that move down here helped as well.
Yeah. Let's go back to Louisville for a second, because you did something that I have always coined as clustering. You were buying on the same block and in the same area. Why did you do it, and how much did it help you to have other options there so you could sell one, use that as an appraisal for a rental, refi that? That's why I love clustering. It gives you so many opportunities to play off yourself.
Absolutely. And I didn't know that's what I was doing at the time. It was just me, quote unquote, buying in the backyard that I knew. So the first triplex I bought, I was living there. I could walk the streets. I jog there in the morning. I knew, okay, this street's good, not that street. This is exactly what's around here. And as other deals popped up in this neighborhood, I just kept buying. And then when I looked back at the portfolio, I'm like, literally, we own like 8 properties on this one street, and they're all like small multis. And then we got this other corner street, and they're all within a mile of each other. And that's when it's like, okay, yeah, this makes a lot of sense. But that wasn't necessarily the intent at first, but then it became a thing because you know the neighborhood, you can use the same people. It makes it a lot easier.
Right, from geographic efficiency to just high value of opportunity. But yeah, you were walking and running for dollars around the neighborhood too, which is always kind of still a way to do it. And I've always found it funny that people are really, I mean, technology is great, but really you can do real estate the way that my dad dragged me around when I was 2 years old. You can just walk neighborhoods, see what's out there. That's all still available. So I don't think it's as hard for someone to get into it. Do you agree with me on that?
Yeah, I think people just want to hit the easy button, Jonathan. Like, it's
Of
like,
course,
hey,
yeah.
somebody just feed me the information, give me the deal. And it's like, guys, you've got to put effort into this thing if you want to get a return back. Yes, there are ways where you could have it could be completely hands off, but your return's going to be minimal and it's going to reflect that.
Your efficiency is terrible when you overspend what I call spray and pray. It works if you have the volume and you have the staff, but you're just overpaying everything. And the majority of the appointments are terrible. Whereas if you go smaller, like you were doing, you're walking the blocks. You're like, oh, wait, I think I met that guy, at the supermarket. Let me just have a conversation with them. If you're just a human, I think you can be a good real estate investor.
That's the key. Literally, that's the key. No need to overcomplicate it. You just want to go out there and kind of put out into the world that, hey, I am an investor, or you are a realtor, whatever it is that you're working toward, and it tends to come back to you. But the key, I would say, is sticking with it for a long time, like having a focus for a long time. Because if you're jumping in and out of a bunch of different things, it's hard for people to help you. But if you stay focused and people come back to you 6 months later and it's the same thing, all of a sudden you stick in their head and you start to get deals.
Yeah, that goes right back to the easy button part where people are like, they buy a program, the program's good, they send out mailers for 1 month and they're like, I didn't get any calls, I haven't made 10 deals, this program sucks. And you're like, wait, you only sent one postcard to each person on the list? Like, let's talk about the science. You need 6 to 8 to go there. But it is, everybody wants something easier. When the truth is, it's really not that hard. And you developed it as a complete side hustle. So anybody can start slow. You don't have to start and spend a ton to really make it work.
True. 100% true. Just that focus element and knowing your criteria and what you're looking for, and also having a why. I think, especially as a realtor and team leaders as we are, right? And soon to be broker owner as you will be.
Yeah.
You have to have a why behind everything that you're doing, because there's going to be some tough days. So you need to be able to look to it and say, okay, this is why I'm doing this. Let's push through.
Yeah, and that keeps the consistency and the not giving up when one thing goes wrong or you get one bad call and you're like, no, I'm scared to make calls. It's like, well, I mean, come on, like this is just what happens. I'm interested to know, what did you think of landlording when you started? Because that part of it is not always what people expect. Some people enjoy it and are very good at it. Some people hate it, hire property management, but then you can lose money in the middle. So how did that go for you? Man,
it was definitely a crash course. Thinking back, there was just so many things that went wrong that I just was not doing right? Like, you just think that, hey, if I treat people, well, they're going to treat the property good and take people at their word. And I think within the first 60 days, one of the tenants that had stayed over just stopped paying, right? And I had to go through this whole eviction process, and I don't know how I'm doing. So I messed it up 3 or 4 times. Like, okay, I got to deliver the letter on this date. Oh, I got to send it certified. Oh, okay, I got to do this, right? And so I quickly learned that systems are critically important. And so after the first couple of months, before I was trying to save some money on systems and say, okay, I could do this through Excel. I could just have like Venmo, or people just send a check. I quickly realized, like, no, I need to invest in something like a Buildium or a Zillow Rent Manager, or whatever software to have it all online. And then I quickly started to find other investor-friendly vendors that could help. So, for example, after I botched that first eviction, I said, you know what? I need an eviction lawyer. It's worth paying somebody $200, $300 to handle this whole process and not mess it up.
Sure.
And so that's something that we have on the team, and I use whenever something like that comes up. And then also even just having a written down screening process, knowing, hey, we're going to look for credit, for background, for evictions. And then, yes, we're actually going to call the people that they put on this form, right? We're not going to take the easy way out. Call them, because you're talking about putting somebody into your investment for the next year. So it's worth the time, right? And kind of doing that piece.
Yeah, I mean, your journey is one in that aspect of what I think all investors need to know, because even though you were still on the side hustle, you started to treat it like a business, not a job. And once you do that and you build the systems and you build all these things that, hey, these are the must haves, now you're running a separate business, which eventually leads you say, wait, this business is running so well. Now I have the option of moving full time into it. Is that what happened? Like, as you're getting bigger, if you don't have systems, you're just going to get messier and messier.
Quickly.
But you seem to avoid that.
Yeah. And literally, so everything that you're saying is true. And for a lot of people that I talk to that are thinking about leaving their W-2 and moving into some form of real estate or entrepreneurship, I always encourage them like, hey, stick as long as you can. You should only leave when your side hustle starts to get bigger, or it gets to a point where you're going to drop the ball on something or the other, right? Yeah. And so from a system standpoint, circling back to the first part of the question, yes, that became critically important, especially when I moved up to Boston because we kept growing. We grew to 15 units and I was able to handle up to 15. Once we got the next one, I had to find a property manager and ship. Yeah. It was like, all right, I can't even focus on going to go close deals. I got to find a property manager. And so that was a whole nother story, which we could get into. And then, the jump from working a W-2 to full-time entrepreneurship in real estate came in 2022 when we were closing enough deals, around 2 per month as a personal agent, to where it was like, all right, this is pretty good. And then we also had this thing come out of nowhere that I didn't even think was going to be a thing. I started managing other people's short-term rentals alongside our own.
Oh,
and
okay.
It went from, us managing our 3 or 4 to now we're managing 10 of these things. And you can make a pretty good penny off of short-term rental management. And so that became the quote unquote base. The commissions came from the realtor business, which was starting to take off. And so we made the decision to make the move.
Yeah, I mean, short-term rental game, especially in the management side, that's systems to a T. I mean, it really, like, when you're running it for other people, if you have the system set up, you're going to be able to take care of anything in way less time than they could, because they were just going to, try to respond to Bobby on a weekend or something and miss it and then get a 4-star review.
That's it. That is it. And in the short-term rental game, it's definitely a lot more heightened because people are staying for a shorter time. For example, right? If a water heater goes out in a long-term rental, you have 2-3 days to correct it. Like, hey, just communicate. We're going to be there. We're going to get it corrected, right? It's all going to be good. In a short-term rental, if it goes out on a Friday and they're only there for that weekend, that's a 1-star review coming your way if you don't get this thing figured out very quickly, right? And so,
and that means you have to take any hot water heater they have in stock, because it just needs to go up, and whatever plumber is available. You have no access to negotiate costs, on a holiday error, which of course has happened to me, I'm sure to you as well.
Absolutely.
But again, that's a systems thing. You just have to be prepared for it in advance, like you were saying before, to know this is my checklist. If this happens, then do this. If you have that, at least you know what to do, even though it's still, it's always going to be fun when something major breaks when someone's there for 3 days.
Oh, yeah. And as you scale up, it gets funner, right? So, but the cool thing is, I would say I did a lot more of the work when we were less than 10 units. Yeah. Now that we've gotten to 30 under management and we have 10 personally, including in that 30, there's a lot less work. We have team members that are handling different pieces, operations managers. Like, there's a unit that's getting put together right now, right? Like, and they're all handling that piece. They just hit me up at the end of the day. Hey, Nee, this is what we need, and kind of go from there. And so it gets easier as you get scale. There's just that in-between moment where you're going to be working a tremendous amount of hours until you hit that breakthrough point.
Yeah. At what point did you get into short-term rentals or using some of your properties for short-term? Because now it's more accessible, but I think there's also more people making mistakes because it's a very niche industry that there's so many people who are experts at it now. You can't really do it the old way like I did 20 years ago, where it's pretty good, but didn't go overboard, and have, entertainment photos and all this. There's really no way to not do that at this point if you want to be number one in the market.
You're spot on. The people that are in the middle or toward the bottom, you're not making any money. It actually would probably make more sense to just take that thing down and move it to a long-term rental when you look at your cost versus everything. And so you have to be in that top 20%. And so you got to put those amenities, you got to have everything buttoned up. But to answer your question, I started in 2021, actually, February of 2021. When I moved to Atlanta, I did another house hack, right? This is a reoccurring thing. Yeah. I've been house hacking since 2016, right? I bought that first triplex, house hacked that. When I moved to Boston, I was living with roommates because it's crazy expensive in Boston.
Yeah.
And then I bought a condo and had a roommate there. So 'cause I was like, hey, let me just own it. And then I moved to Atlanta and I bought a single family with an in-law suite. And I wanted to try out this short-term rental thing. A couple of the other investors I knew within my network had been doing this for a couple of years and were like, Niyi, you got to get into this. I said, you know what? I'll try it in a house hack because I know if it doesn't work, I can just move that to a long-term rental and still be good because I ran the numbers both ways. And long story short, I almost doubled the income that I could have made as a long-term rental. And then it opened my eyes to doing more of that. And we expanded quickly.
Yeah, I see this option exactly what you did. So good for people who are buying small multifamilies, 2 units, 3 units, 4 units now, because you can play around. Like, at least try one. What do you know? Oh, they're like, oh, I don't want to spend all on the furniture. It's a 1-bedroom. Like, just sell the furniture, keep it for something you'll do it again in the future. I'm not saying buy a 5-bedroom and do that. That's a big commitment. But you found quickly, hey, this is working. But if not, you had a fallback plan that was just set up. And now with midterm rentals in the middle, there's really no way to lose. You just try all of them if you want.
That's the key. And in this market, right, where a lot more eyes, it seems to be, are on real estate, in order to make the numbers work, especially in year one, you do have to get creative with some of these strategies. It's not just as simple as it was back in the day.
Yeah, that's a great point. With the high interest rates, it's not, you can't read the house hacking book and expect to get the same returns now because it was, the rates were 2.5% to 3.5% then. So of course everyone was crushing it and cash flowing, even if they're living in the large unit of the multi. And now you have to basically live in the basement unit, hide, and hope for the best and do short-term rental to make it back. And then again, even when you leave, it's becoming dicey on terms of how much money you make. But in places like where I am, you're getting huge appreciation. So the benefits are there.
That's the piece. And it's one of those where if you're in real estate to get rich quick, right? Which is, hey, I want to have money coming in and just be lounging on a beach in a year or two. Yeah. It's probably not for you. But if you have that long-term outlook, right? Where it's like, hey, over the next 5 to 10 years, am I going to be happy that I own this asset? I think it's a great wealth generator still. You just got to get a little more creative and or put in a little bit more elbow grease up front to make it work because the secret's out.
Yeah. And I've been saying, this as an agent, you have a better market for buyers than I do, but I feel like with housing costs up so high, there's going to be a lot of people who just choose to rent and buy investment properties. So it's just a great idea. You can buy in the Midwest, you can buy near you. There's still plenty of deals around Atlanta that I think people can get for investments. And there's a lot of opportunity because it's in the South to do either short-term or midterm, which we'll talk about. But yeah, I think people just need to kind of get an overhaul. What I always find, Bigger Pockets is awesome, but people read the books as if it means now, like they'll read the Burr book or house hacking, and the same things just don't apply. All of what they're saying to do is still completely applicable. It just doesn't work with a 7% rate, right? It's just a little bit of a different formula.
Yeah, and I'm sure you get this as well. I get a lot of newer investors through Bigger Pockets and other places where they'll come in like, hey, I need the 1% rule and I need it to be in a B-class neighborhood. And I'm like, gosh, listen, Atlanta is not the market for that.
Yeah, where's the time machine for this one? I'm in New Jersey. We have the highest taxes per capita in the country. People are cash flowing, but you need to put a solid chunk down to be able to do well. But yeah, I find the 1% rule kind of funny. Of course, in the Midwest, it's still achievable, but that's not the metric. Like where I am, you have to know your area, as you know, what works here. And for here, I'm like, we're counting on appreciation. There's people who bought in 2021. I was just sending out emails. They're up 250,000 already. That's crazy. So, and when people are like, oh, I'm not sure if I should get into real estate, rates are high. What if you just bought a house, lived in it, which I've done plenty of times, and you just live there and enjoy it. And then 2 years or 4 years later, you're up a couple $100,000. That's pretty awesome. That's real estate.
Yes. And that's the piece that I think people forget about. It's not just the cash flow element. It's also that appreciation element.
Yeah.
And you got to ask yourself the question, is it going to be cheaper 5 years from now or more expensive? Right. And depending on your answer to that question, that should tell you what you need to do when it comes to investing in real estate.
Yeah. It's like when you talk to a new investor, a new home buyer, and they're like, hey, I'm going to wait till rates come down. And I always say the same thing. I'm like, well, how's your crystal ball looking? What's it telling you when rates are coming down? Never. What if you waited out 7 years and then you haven't bought anything and you're still doing the same thing? You're losing, interest on that money. But it is hard to explain to people. Everybody has to get it their own way. They have to read the book, the purple book, Rich Dad Poor Dad and get it, but they also have to apply it. And you took the book and then you applied it by going out and figuring out other things. Is that something that you would recommend new investors to do now? I still like reading all the books. Of course, listen to podcasts. We both have them. But you still have to get out in the field, see properties, meet other investors to really understand what's going on in the current market.
100% agree. Like, you can stay and read and study and listen to podcasts all day and think you're making progress. And there's a time and place for that. It's good. Like, I like listening on the road and things of that nature. When I'm working out, like, I'm like, okay, I'm going to listen to something so I can get some education.
Oh, sorry. You're a weirdo like me. You listen to podcasts when you work out. Everybody's like moving their heads, and I'm listening to like money podcasts. It's like, this is what motivates me.
Listen, I didn't used to be like that. I played football, at Temple. And so when I left there, the first couple of years, all I listened to was like music, right? And then after a while, it's like, all right, I need something different, right? And so, I listen to podcasts all the time. Even when I'm in the car, I got to look at who's around me like, hey, are you good with this? To make sure I'm not freaking people out. Like, what is he listening to?
Yeah. Sorry, I interrupted you on that train, though, but I just think it's funny because that's just a classic. That's exactly what I do.
Come on now. But to your point, like, you need to get out there and take action. And I think that now the thing that's been pretty cool about the real estate realm, at least, is, to your point, you mentioned when you first were getting started, you're like, wow, you took a look up, like, man, there's other people actually out here doing this. Like, let me connect with these folks. Now it's a known fact. Like, people can find your tribe. And so I always highly recommend, especially for newer investors, that you find a tribe. Find individuals that you connect with. Find with other investors that you can talk to on a weekly or daily basis. Find investor-friendly realtors like Jonathan and I, right, that can help guide you through the process and give you contractors and things of that nature to make your dreams come true.
Hey, it's Jonathan. I hope you're enjoying this episode with Niyi as we chop it up about investors, investor-friendly agents, and all the things in between. On this brief interlude, I just want to remind you that in addition to the podcast, now I've opened a Substack. Now, Substack is just a publishing platform, so I'm putting out a lot of posts on there. And right now, everything is free. It's going to remain free all the way through to the end of 2025. So you can go to TrustScreen, that has an E at the end, .substack.com, and you can find articles on everything. House hacking, how to pick an out-of-state real estate market, how to look for uneven multifamilies, 5 tips to create a real wholesaling business. It's got everything. It's got all of my history, and I'm just pumping it out in short little articles that can help you. Let's get back to Niyi. Yeah, I have a couple questions for you that I think will really help investors. And whenever I have someone who's an investor and also an agent, I always ask these questions. One, should investors get their license? I think I know what you're going to say. But two, what should they be asking a real estate agent to figure out if they actually know anything about investment properties? Because we both know 99% don't know anything.
100%. And so to answer the first question, only if they're going to actively use it to help other people. If you're getting your license just for yourself, like, I didn't even realize this. There's so many fees that you're paying. Unless you're going to be buying minimum 3-4 deals a year, you're not going to save anything by getting your license. And so I would...
And you won't be good at it. That's a really good point, because if you're going to be your agent, you better be a really good agent, or else you're going to mess yourself up. You want to be an investor who does one deal a year, and then you try to do it, and then you try to put out your first flip listing, and you've never done a listing. Just hire the best listing agent.
Yeah, and build that cost into it, right? Become an expert at something, master something. And so unless you're going to go, at least, minimum part-time there and help other people with it, I would not. And then on the other end, when you talk about what you should be asking your realtors, you should ask them if they invest themselves, right? When it comes to all the different partners that I work with, whether it's CPAs, whether it's lenders, I always want the folks that are investing themselves, because look at it, we're in tax season. That's why it's on top of mind. I'm trying to work through the taxes. But
this may be the first year I file on time. Of course, this comes out in June, but hopefully I will have filed on time this year.
Come on now, Jonathan, you are way ahead of me. Last year was the first time I filed late, and now I think it's a recurring thing. It's like, okay, I'm definitely not on time. But for my CPA, that was the first questions I asked the CPAs that I use is, hey, what do you invest in? Because if you invest in the same or similar type of real estate I do, you're going to be learning all the tax code for yourself to make sure that you can take advantage of everything. And now you can relay that to us. And so having investor-friendly people around you is what I would ask.
Yeah, and I think it's helped. I mean, I can't stand Zillow, but since Zillow got MLS access, now you can go on an agent's profile and see everything that they've closed. So if you see a bunch of multifamilies, like that's your person. They've sold to buyers, 11 multifamilies this year. They know house hacking. You can actually see the data now. And I think that is probably helpful instead of somebody just selling you a line. Oh yeah, I work with so many investors. You go on their Zillow and it's zero. It's like, it's connected to the MLS now. We can see.
That's the piece. Now it's all verifiable and it's only going to get more and more transparent. And so you should be working with somebody with a proven track record, ideally, and or somebody that's an investor themselves.
Yeah, and from the other side, so, us as agents, there's a lot of BSers as investors out there. So when somebody comes to you, how do you vet them to make sure, hey, this is somebody worth my time as an agent? Because I think this may help the newer investors or investors with maybe one deal under their belt who think, oh, anybody can do this, which we both know they can't. What should they have ready to be presentable to a really good investor-friendly agent?
Man, this is critical. You need to be, as much as you can, laser focused on, hey, this is what I'm looking for, right? I can't tell you how many conversations that Jonathan and I probably have on a daily basis where it's like, hey, I just want a good deal. All right, I want to do a burn, maybe a flip. I was just
going to say that.
Maybe a house hack. I'm open to all that stuff. And so my team personally, what we do on the first initial call with anybody, we make it 15 minutes on purpose, right? So that it can be tight. And we narrow the focus. So, hey, what are you looking to do next? I know you want to do all these things, but what's the next step? And then we make sure people have pre-approvals, right? Or we connect them with our investor-friendly lender, but that's not needed. Yeah. You don't necessarily have to have that for the first conversation. And then we have a buyer consultation call where we jump on a Zoom for 30 minutes and walk through the buying process. Whether you bought a house before or not, it may be different with us. We show you how we run the numbers. So we're all aligned before we actually get into the heat of an offer out there.
Yeah, and I found that I always have to get investors to choose geographically. I require just 3. I won't do it if you're not interested in 16 markets, around Georgia. That's just silly, and it's also not a good use of anybody's time. If you're picking 3 markets inside an area, great, I work all those markets. But if you come to me and say, well, I'm interested in South Jersey, Central Jersey, North Jersey, a little bit of PA, I'm not sure where I'm going to buy, that's already a bad use of my time because I could lose all my time if you just buy somewhere else.
This is true. 100% true. Like, you've got to narrow that piece down. I even talk to people that are still shopping different states, like you just said. Like, hey, exactly. I'm looking at Texas, but I'm also looking at Georgia, and I'm looking at North Carolina. And I talk to them in that 15 minutes, but we definitely leave that call saying, hey, guys, if you want to narrow down to Georgia and work with us, we will help you. But while it's still out in the air, we're not going to be actively looking because that is just a burn on your time.
Yeah. And I mean, especially so, let's talk about out-of-state investors who are investing in our states as agent, because that's always hard to me. New Jersey is a small state comparatively, but then people are like, oh, I just want to invest in New Jersey. I'm like, it's not that small. Like, it's not Delaware. Yeah, I can't get from end to end right away. And there's also differentiations in the markets between them. And even if somebody says, Atlanta, do they know how big Atlanta is? It's like if somebody says, no, I'm really interested in San Antonio. San Antonio is like a country. Yeah. So your out-of-state investors may not know this. And then that, as agents, puts us on the background. Like, I don't want to do that work for the investor. I want to, as you said, get them to tell me exactly how focused they are. Then I can really be focused when I'm working for them, right? Absolutely.
And one of the things that we've done, we host a podcast as well, but we do it a little bit differently. We have open sessions, and it allows investors like that who may not know the area or be narrowed down to jump on and have that conversation. And it's at a time where we've got other investors that are active investing, and they can all kind of connect to each other. And it links back to us at the end of the day. And it's a better use of time in a group setting than one-on-one for 2 hours trying to explain the whole state of Georgia to somebody.
Yeah, and I've also found that just by putting out content and being good on social and being transparent, you get much better DMs and one-to-one emails. Like, I can't tell you, I'm sure you as well, over the last 10 years, how many emails I've gotten that have turned into clients where in the old days, I might have thought like, oh, everything's spam. I get a lot of spam too. But like, they're like, no, I've been watching you on Bigger Pockets for a year. I watched the YouTube. So we don't realize that all the information that we put out there for free can secure so many deals in the future because people can know, like, and trust us before they even meet us.
And that's a huge change over the last decade, right? That evergreen content model.
Yeah.
And it's pretty incredible. And with the advent or AI coming to market and kind of changing things, I'm actually a little scared to see like what this next piece looks like. Because now I'm hearing that you can record podcasts and all that stuff with literally not even yourself there. It could just
yeah, that's crazy.
but you're spot on. Like this evergreen content, this is something that our team's starting to lean into. I love what you're doing. And yeah, it's definitely the new wave.
Yeah, AI is interesting because I was like a hard no on it. And now I figured out better ways to use it. But in real estate, there's so many ways that can make it less transparent. We all want it to be more transparent. So I think everybody just has to kind of go with it and see where it goes. But yeah, it's interesting. As we were saying before, technology helps. But if you're a brand new real estate investor and you don't want to spend a bunch of money on a course or a program or some postcards, like you can still watch a ton of free content on YouTube and then just walk your neighborhood and look for houses that are in disrepair and then go to the tax records for free and look it up, right? This is what my dad did, when I was, this is like, 50 years ago we were doing this, and you can still do the same thing.
It's crazy to think, but yes, you can. And just about any strategy that you hear about will work if you give it enough time and you focus, right? Yeah. I think the key is having a focus, and that's almost a superpower nowadays because you can get distracted by a lot. If you're able to focus on something, that's a superpower. Yeah. If you're able to do that for a long time, you will eventually master it. You'll put in your 10,000 hours, and all of a sudden you're going to see all the fruits of your labor start to come back to you. And it almost resembles like a hockey stick, right? Like those first couple hours that you're putting in, it's going to feel like when you were trying to walk. It's like, it's like, what the heck's going on? Is this worth it? Should I jump to something else? But if you push through, you have a big enough why, and you stick with something long enough, all of a sudden you start getting the learning, start getting better, your conversions start going up, and boom, you hockey stick.
Yeah, and I think part of that, you strike me as someone with a very strong sense of self. Like if you don't have a strong sense of self, you're going to keep getting disappointed because you're going to be thinking, oh, am I doing this right? But if you know, like, hey, I'm in this for the long term, I'm confident, I'm working on my skills here, it helps you keep going because as you said, you have to. If you just do the same thing, whatever it is, as long as it's a healthy habit every single day, and then you do it for 1 second more the next day, you're going to be elite in like a year. Like that's it. It's just a year. Even if you do 5 minutes and then 5 minutes a day or 6 minutes one day, right? It's the consistency that people, as we were saying before, they get bored or they think it's, DIY, except they really want DI, SE, somebody else. Sure, I'll do it myself, but as long as somebody else does it and gets all the results. I mean, it's tough now with everything on social media because it looks like everything's easy, but it's really more about consistency than hitting that easy button, as you were talking about before.
That is the piece. And what you don't realize is some of the people that are on social now, it's not like they just came up overnight, right? Like they got this stuff because they've been in it for a decade plus, like 10 years. Even when you mention the word elite, and I immediately go back to sports, right? When you look at some of the top athletes that we watch, they don't hit their quote unquote prime until year 5, 6, 7 into it, right? The first couple of years is figuring it out. Once they hit year 5, 6, 7, that's the prime. But the cool thing about entrepreneurship and business is you can have a super long prime because it doesn't depend on your body. It depends on your mind. And as long as you start putting the systems in place and getting better, like even the short-term rental stuff, right? When we first started, we were putting together just the normal, like you were talking about, hey, this is just a regular short-term rental out there. It has furniture in it. You can sleep there. Hopefully people book it. And it was just good timing. Now, the ones that we're putting together now, my goodness, it blows the first ones out the water. And we really understand what we're doing now.
Yeah, and there's still some of those people in the market who are still doing it the old way, and they're wondering, hey, why am I not performing as well? I mean, have you looked at the competition? We all have pickleball courts, and you don't even have a fire pit. I mean, it's just a different vibe for what's working now.
That's it. That is it. And I wish I could put a pickleball court on every property because those things kill, man. But
I always think like, is this going to end? Is like one day, it's not like something can come, but is there going to be a study that like pickleball, gives you like worse tennis knees or something? I still think people will play it because it's just a smaller court. Why play tennis now when you can play pickleball? Sorry to the tennis aficionados, which I still prefer tennis.
Me too. But, Come on now. Hey, we got to get around at some point. I like tennis because you get more cardio, I feel. But pickleball, it's fun too. I'm not gonna lie. Pickleball's pretty fun.
Yeah, but there's like 75-year-olds who are great. I don't want to lose to like, I mean, I'm old, but it's just like, I think you can lose to anybody in pickleball, which is awesome. But like, I don't want to.
Yeah, this is true. It's one of those, we'll call it a humbling experience, right? You get out there, it's like, all right, like I'm not telling anybody about that game.
Yeah. I mean, it's like when you go from tennis to like racquetball back in the day, and then you realize the racket's so much smaller. So when you try to swing it, you're just missing because you think it's a bigger racket or it's going to be easier. And then you don't, realize everything. But I mean, that's really the same with real estate investing now. Things are changing. They're often still the same, but you still have to adjust if you want to go from what you were doing, rental properties, and then do short-term rentals. It's not that easy. There's a lot of content that can help you. But if you just think, hey, what would I like as a short-term rental stay, that can help you out, right? I mean, figuring out what they really want can really help you do better, at least to start, if you don't take an, STR class or something.
100% agreed. It's one of those where you have to put some thought and intention behind it and make sure that it's somewhere that, one, you would want to stay, and then also just do a simple analysis of, okay, here goes the other 4 bedrooms around the area. What do they have? How can I potentially one up or at least match what they have?
Yeah, people always ask me, should I get a subscription to AirDNA or one of these things? I'm like, why don't you just go on Airbnb? You're brand new. Just look at the area that you want. Just look at every single property that's a 3-bedroom. See you can see what it costs. You can go and put in the booking. You can see how far out it's booked, how many bookings they have. AirDNA is awesome, and a lot of companies have great data, but when you're brand new, there's lots of stuff you can look at. I think people just want to move too fast. I like looking at houses. I can look at Airbnb all day. I mean, I could be on there 2-3 hours and then look up and say, oh, wait, it's already nighttime. This is fun.
Yeah, this is true. And that's part of kind of putting that calendar to use too, right? To make sure we don't get caught in the rabbit holes.
Yeah. Have you advanced to any other larger properties other than small multifamily in your career now?
Yeah. So we actually, and this is pretty cool, over the last 2 years, really a little bit longer than that, because we started building it back in 2023, but we bought land in 2022, right? In Louisville, Kentucky, with my realtor. My investor-friendly realtor in Louisville actually is now my partner. So we bought land. We've already developed self-storage, 227 units. Right now, we're actively working to get it fully rented. We just launched it last year. And so I think right now we're at like 34% or so. We need to get to 50% so I can stop putting money in every month. But once we get to 50%, it'll cover itself, and then it'll be gravy from there. And storage is very sticky. Once people put their stuff in, they're typically not going to move for a small increase.
Yeah.
And then we also have the rest of that land that we plan to build townhomes on, and that's going to be our first syndication. And so
awesome.
I've sold all the properties that I had in Louisville, the 30 units, and consolidated it into these 2 projects. Because one, managing property managers is a whole other job and task in and of itself. And 2, this just made a lot more sense to move it over to the commercial. The equity was there. And so that's kind of what we did.
Yeah, you said something really important. It's managing the property managers. And people think, oh, well, I'm getting a property manager. I don't have to do anything. Yeah, sure. If you don't do anything, you're just going to lose a bunch of money from not paying attention to what your property manager is doing. So tell us about that experience. What rabbit holes can you make an error by not looking in when you're hiring a property manager? Because I know you're going to say you've stepped in them.
Oh, yeah, absolutely. Yeah. So when I was up in Boston, right, I told you I was managing those 15 and I was getting very busy. And so I would just start calling around, hey, I need a property manager. And I moved way too quickly to hire one. I thought, okay, this is a bigger company. They got a website. This is going to be great. Lo and behold, about a month or 2 into it, I should have known this was a red flag. But the tenants were still calling me. They're like, oh, yeah, we tried to call property manager. Nobody answered after 3 times. And we left a voicemail. We never heard back. So, we called you. And so that was the first red flag. That consistently on and off. Every time I talked to them, they do better. And then they would just go back to before. And then we started to have like break-ins on units that were empty. And they weren't getting shown to the way they should be to get them rented and all this stuff. Like it just was not systems in place that probably should be for property management. And so when we ended up moving on from them to another property manager that was 1,000,000 times better, but still, a couple things, but 1,000,000 times better, they actually were taking the earnest money, or not the earnest money, the security deposits.
Yeah.
And they were using this in some of their business. So it literally took me 3 months after letting them go to get the security deposits back. And I only got it back because I hit up our lawyer friend to send a letter to them to say, hey guys, like we need you to turn over the security deposits for the tenants because they're checking out here soon. And so it was a whole thing. It was a whole thing, man. But yeah, property management, you definitely want to vet them. You should have questions that you're asking them, and you should ask them about different scenarios of like, hey, if this happens, how do you handle it, and things of that nature.
Yeah, and that goes to just knowing more real estate investors. So if you're in the market and you know other real estate investors in the market, then you can get recommendations of who they like and who they don't like. I mean, those are always the best. I much prefer a recommendation than, going on Google, because everybody can have a nice shiny website and send you a cool PDF. And like you said, then they just don't answer the phone.
Yeah.
Great.
Yeah. That's the piece, right? And the way most long-term property management contracts are built, they actually make more on turnovers when you think about it, right? So a lease-up fee could range anywhere from half a month's rent to a full month's rent. And so, for example, let's call it a full month's rent. Let's say you're renting for $1,000 a month. Turnover fees $1,000 to re-rent it. That whole year, they're only going to make $1,200 if they're making 10%. A lot of fees are less than that, right? And so it's almost incentivizing them to want to do turnovers. And so with the second property managers, we actually did a little bit of a custom contract to incentivize retention. I paid bonuses based on retention, not on the lease up, and that helped tremendously.
Yeah, it should be. If I get 0 calls and the tenant is happy, like that's going to be a bonus as opposed to the other way of you just getting all, why are you calling me? I have a management company here.
Yeah, exactly.
Yeah. So in today's real estate market, of course, you have the knowledge as an agent as well. How would you suggest to someone who wants to break into the game with disposable income, where would you tell them to look to invest right now, 2025?
If they're open to it, and I think this was the same in 2015, 2016, and 2025, right? All the way up to now, house hacking. That's one of the best ways to get started. If you're open to a little bit of discomfort, right? And especially if you can have a family situation that can support this, house hacking is the best way. It's like learning with tricycles, with a tricycle, right? As opposed to a motorcycle. Now, that being said, if house hacking is absolutely not an option, I honestly would look into a bit of the pad split model or a short-term / midterm, right? Yeah. Because this allows you to get into a solid neighborhood, but also still have cash flow on the back end. If those things aren't an option, then also look at small multi. The only thing with small multi is the price has gone up on these. Yeah. You do have to put down at times 20, 25% if you're not going to live on it. And so, those are kind of the options I look at in order.
Yeah, I love MTR now just because I feel like you can do midterm rentals in literally any city in the country because you can have insurance people now, home buyers who are homeowners who are out of their homes. There's so many different options above travel nurses, which kind of like popularized it again during the pandemic. And you don't have to furnish it as nice as an STR, and you need more creature comforts than amenities, which I think is really helpful for MTR. Those people are coming, they're on a job contract or something. So you get 13 weeks. They just want it to be quiet, clean, and comfortable. They don't need, 6 pinball machines, and a slide, which is cool, but they're not expecting, a 3-hole miniature golf course in the backyard.
This is true. And funny enough, I'm actually putting that in one of our STRs right now. Don't tell anybody.
Nice.
But it's literally going to be 3-hole mini golf.
That's awesome.
But to your point, the other thing that I think people should know is that you can get a lot of those MTR clients that you're talking about through these sites of Airbnb and VRBO as well. Yeah. We've been fortunate enough to get insurance companies that'll look through there, or even the person that's insured look on there and then reach out and we'll get them for 9, 12 months at a time. I'm like, man, this is great.
Yeah. And they overpay. The insurance companies overpay. I mean, it's a no-brainer. And that's what, as we were saying before, that's how you can, you can have a 3-family and you're like, okay, well, these 2 renters came with the place. They're a little bit under. Why don't I do MTR in one? Now at least I'll get a 1.5x what I was getting on the long term. And you just have to get the furniture in there. And I think it's a smart spend. You'll pay it back in the first year if you do it the right way.
Oh, yeah. And then the thing to keep in mind is rents don't just stay stagnant. Now, right now, they went up a lot over the past couple of years, so maybe it's not as much of an increase. But when you look at it, I look at the short term and the midterm as a way to get the cash flow now and hang on to the property and let those rents start to appreciate. Because over time, all of a sudden, it makes sense as a long-term rental. I'll give you an example. I bought that house hack, the one I bought when I first moved to Atlanta. At the time, that was the most expensive house in that neighborhood. We bought it for $670, right? Yeah. Now there's a house next door that was built for like $900K. It's crazy. And then there's other ones that have sold for like $800. So this one's gone up significantly. But because the interest rates were lower and things of that nature, The mortgage on that house is $4,000 a month. And people right now are renting it for $5,000, right?
Yeah.
We're going to be able to keep increasing that, hang on to the property. We got equity that's building. And it's like, okay, now it makes sense as a long-term rental. And it could make sense for a long time coming. And so if you give it a little bit of time, these properties will start to make sense as a long-term, but you have to use one of these creative strategies to get in. So you're not looking back 7 years saying, man, I wish I had jumped in.
Yeah. And I mean, again, that goes to having an investor-friendly realtor who understands, they invest themselves. They understand, hey, what's your goal? If your goal is cash flow, we're going to be looking at different type of properties. And we're going to have to tell you like, hey, cash flow looks good in a D+ neighborhood, but you're not going to like the management part of that. And that's why I think I try to get people to steer far away from cash flow and focused on the asset and the appreciation. It still can be steady, but we all know the best, it's a 1.75% rule in Philadelphia. Okay, have fun with that.
Yeah. You don't want to go down that street to the corner store, any of those places. Yeah. It's not going to be good.
There's also a reason there's no photos of the basement because everything's coming due in the first, 7 seconds after you buy it.
Yeah, it's being held together with duct tape right now. That's exactly
in Philly, that's actually possible. Yeah, that's true. Yeah. Awesome, man. Where is the best place for people to get in touch with you, learn more about you, connect with your podcast and group?
So if you go to ekabohome.com, EKABO home.com, that's the best way. It has all our socials, it has the podcast, and it has a direct link to connect with us as well.
Yeah. Awesome, man. Well, this has been great. I'm already 100% sure we're going to stay friends, trade some referrals. It's just been an absolute pleasure to meet you. I think we're very similar people. I love the conversation, so I appreciate you spending the time today.
Come on now. Jonathan, I appreciate you having me, and we're definitely going to have you on our podcast, vice versa. And I look forward to partnering with you on some deals, man.
Yeah, I'm excited. All right. That was a great show. I'm very excited to stay in touch with you. That was Niyi Adewole. I'm Jonathan Green. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on the next episode of Zen and the Art of Real Estate Investing. Episode 248 is with David Auerbach. Now, he created the daily REIT Beat newsletter. So if you're following, we're going to talk REITs. And we haven't talked a ton about REITs. They've come up on shows, but this is a deep dive. We're going on the REIT Beat with David. We'll see you next episode.